Okay, so picture this. Global leaders are all heading to Davos, but this year, something's different. You can feel it in the air. They're not just there to talk about growth like usual. No, they're facing a global financial system that's under some serious, unprecedented stress. We're talking about a perfect storm of crises all hitting at once, and we're about to break down exactly what that means.
Yeah, a troubling constellation of pressures. That's the phrase one source used, and honestly, it just nails the feeling of urgency, doesn't it? It feels like the old rules of the game are being rewritten right before our very eyes. And let me tell you, the stakes could not be higher.
So what are these pressures exactly? And what makes this time feel so different from past crises? Well, we're going to dig into 4 massive systemic shocks that are hammering the global economy all at the same time. This is the core of what's going on.
All right, let's dive right into shock number 1. And this one is a big one. We're talking about a tech breakthrough in AI that basically came out of left field and seemed to change everything, well, pretty much overnight.
You know, for years, the common wisdom was pretty simple, right? The country with the biggest, baddest, most expensive computer chips was going to win the AI race. End of story. But then this new Chinese model, DeepSeek, just pops up on the scene, and it didn't play by those rules. It wasn't about brute force hardware. It was all about a super radically efficient algorithm. And just like that, it shattered that old assumption to pieces.
And this is a huge shift in thinking. The race isn't just about who can throw the most money and the biggest hardware at the problem anymore. No, the new game is all about algorithmic efficiency. It's about who can make AI smarter, not just bigger. Kind of like the difference between raw muscle and the complex wiring of a human brain.
So what was the financial fallout? Well, it was immediate and it was absolutely massive. You have the chip giant NVIDIA losing a jaw-dropping $593 billion in market value. And get this, that was in a single day. That's just how violently the market reacted to this new reality.
The ripple effects here are just huge. Think about it. A core piece of American economic and geopolitical strategy was controlling who gets the best computer chips. It was their competitive moat, right? Their big advantage. And with this one development, that moat, it pretty much just evaporated. Gone.
But here's the thing. This tech shock isn't happening in a vacuum. Not at all. It's piling even more pressure onto a financial system that was already starting to creak and groan. And that brings us right to our second major shock, a really dangerous financial doom loop that's brewing inside the U.S. economy.
What's happening is the U.S. Treasury market, the market for government debt, is getting really, really nervous. There's a new economic plan on the table mixing stimulus with high tariffs, and it's got investors spooked about future inflation. So what do? They start demanding higher and higher interest rates to loan the government money. They want to be paid more for the risk.
And this whole situation actually has a technical name. It's called a bear steepening. But what you really need to know is that it's a huge red flag for long-term anxiety. When those long-term interest rates shoot up way faster than the short-term ones, it's the market screaming that it has less and less faith in the value of your money down the road.
And this kicks off a really nasty, vicious cycle, especially for regional banks. Here's how the doom loop works. First, rising interest rates make the bonds the banks already own worth way less. So boom, that's a hit. Then, at the exact same time, the loans they gave out for commercial real estate start going bad left and right. It's this painful double whammy that puts immense pressure on these banks, and by extension, on local economies and, people's savings. So just how bad is it? Well, the delinquency rate, that's the rate of people not paying their commercial real estate loans, has rocketed to a record high of over 11%. I mean, that is a ton of bad debt piling up, pouring fuel on the fire for banks that are already getting squeezed by their bond losses. Okay, so all this instability brewing inside the US doesn't just stay there. It's spilling over and having major international consequences. And that leads us directly into shock number 3, the slow but steady erosion of the US dollar's dominance on the world stage. For, decades, the global rule was super simple. If you wanted to buy oil on the international market, you had to use US dollars. This was the famous Petrodollar system, and it was a massive pillar holding up the dollar's power. But now? Well, now you've got major players like Saudi Arabia actively looking for off-ramps, searching for ways to trade outside of that dollar system.
And listen, this isn't just theoretical talk. We are seeing real, concrete moves. Saudi Arabia is now issuing bonds in Chinese yuan. They're even thinking about selling their oil directly for yuan. Meanwhile, countries that have been reliable buyers of U.S. debt for years, like Japan, are starting to back away. These aren't just tiny cracks in the foundation. These are major structural shifts.
And just like with AI, technology is pouring gasoline on this fire. You've got the old SWIFT system for international payments. It's slow, it's clunky, and it's very US-centric. But now, new platforms like mBridge are popping up, and they're a total alternative. They use what are called central bank digital currencies. Think of it like official, government-backed digital money. And they let countries trade with each other instantly. The key part? It all happens completely outside the US dollar network.
So let's recap. You've got massive uncertainty in tech, in finance, and in the global currency system. Where does all that lead? Well, it leads to our fourth and final shock, a global stampede towards safety, specifically towards hard physical assets.
And what's really crucial to get here is that this isn't just about people getting nervous about the US dollar. It's bigger than that. It's a broader collapse in trust towards all Western fiat currencies, government-issued paper money. Nations and investors are desperately looking for something more tangible to hold on to.
And the result is plain to see. We are witnessing a dramatic repricing of these physical assets. Just look at gold and silver. They're surging to incredible new heights. This chart tells the story perfectly. A huge chunk of global money is on the move, flowing away from paper assets into something real, something you can actually hold.
Now, this is not happening by accident. This is a strategic chess game. You have countries like China who are actively, methodically preparing for this new reality. For years, they've been quietly but consistently buying up physical gold, stacking their reserves, and positioning themselves for a future where the US dollar isn't the only game in town.
So, let's pull it all together. We've just walked through 4 incredibly powerful shocks: a tech shock, a financial shock, a currency shock, and a geopolitical one. And they're all converging at the exact same time. The big question is, what does this new reality actually mean for all of us?
And that really brings us back to the central question, right? The question that's probably on your mind and definitely on the minds of those leaders in Davos. Is it time to worry yet? I mean, with this whole constellation of pressures, are we staring down the barrel of a major global crisis?
Well, according to the analysis, the answer isn't to run around screaming with your hair on fire. It's not about alarmism. The smart move, the prudent course of action, is a calm, clear-eyed assessment of what's happening. The rational responses are all strategic. Things like diversifying your country's holdings, building new payment systems, and just plain strengthening your own economy from the inside out. The key takeaway is this. This is about preparation, not about panic.
And so that leaves us with one final, really provocative thought to chew on. For the better part of a century, pretty much the entire global economy was built on one system, an American-led system. Right now, today, we are watching the very foundations of that system get challenged from every possible angle. So the question isn't if things are going to change anymore. The real question is, what comes next?